Hello, everyone. Welcome to this week's weekly market view for Monday, the 20th of October to Friday, the 24th of October, 2025. My name is Vishal. Let's get started. All right, to begin with, let's start off with the Nifty analysis and let's start off with the monthly chart. So you can see the monthly levels of demand and supply are already plotted on the chart. A monthly demand is 24,763 to 23,976. These are going to be key levels of demand on the monthly chart. And then you have 25,322 and 26,324. These are key levels of supply. Although these levels are tested, it will be interesting to see what does price do inside the levels or once these levels break out. Let's move on to the weekly chart. On the weekly chart, we have now pro gap level at 26,059 to 26,258. And seems like there could be, or we could be seeing some profit booking coming at this level. And then you also have the level of demand at 24,886 to 24,564. So these are going to be the key levels of demand and supply on the Nifty index on the weekly chart. And if we now go on to the daily chart, these are the closest levels of demand. The first key level of demand is 25,283 to 25,007. And then the next key level is 25,622 to 25,508. So these are going to be the key levels of demand on the daily chart. As you can see here, the market has actually broken out of this resistance point. So the belief is that in case if there is some kind of profit booking that comes because of this area over here, the supply zone over here, there is a probability of a retracement coming into this area. And then more or less, this could be a level on the smaller time frame, could be a 75-minute or could be a 25-minute level of demand from where we could expect to see the price to retrace and then continue towards the higher levels of supply, which is 26,171 to 26,307. Let us see whether this happens this week on the Nifty. Let's move on to the next index now. Let's start off with Bank Nifty. Let's start off with the monthly chart. So the monthly chart is making an all-time high. So there is no doubt that there is no supply zone over here. The key level of monthly demand right now is 54,636, 53,441. But again, this will only be confirmed once we close this month. But seems like based on the candle, it's going to be a bullish month. And this could be the potential new area of demand, drop-based rally. Let's move on to the weekly chart. On the weekly chart, we don't see anything clear, which is closer to the current market price. However, one could argue that this could be a little bit of a consolidation because we have this rally base and then a rally gap up, but nothing seems to be there. There could be something interesting lining up in this area over here. So let's go on to the daily chart. And as you can clearly see on the daily chart, there are two key levels of demand. There is no supply. 56,805 to 56,240 and then 56,226 to 55,708. These are level on top of levels. So in case if the price pulls back here, we could expect to see a bounce and a trend continuation to the upside on the Bank Nifty. Let's move on to the next index. We have the USDINR. Let's start off with the monthly chart on the USDINR. So on the monthly chart, we are seeing a little bit of a sell-off on the USD-INR. However, now we are coming into this basing candle over here. Now let's move on to the weekly chart. On the weekly chart, we have this rally-based rally level of demand, 87,000.59 to 86,090. This is a key area to watch out for. In case if the USD-INR comes into this area, we might expect to see a bounce, which could slightly put a little bit of pressure on the indices. From last week, we had this level of demand on the USD INR. So this week, this level actually got violated. And because this level has got violated now, we are going to remove it from the analysis. Now we are in a key level of demand. And you can see for the past 3 days, we have seen a pretty good reaction coming out of this level. Prices have touched once, twice, thrice, and nearly the fourth time we are expecting to see a bounce. In case if the USD INR does give us a bounce from this level of demand, 87.72 to 87.51, price could travel all the way towards the next level of supply, which is 88.68 to 88.93. Now, in case if the USD INR starts moving up, then that could put a little bit of a pressure on the Nifty, which means the idea is not to go short on the Nifty, but the idea is that Nifty could give a pretty decent retracement towards that lower time frame level of demand, which I already spoke about. and then price could continue to trend to the upside. So this is how you can use the USD INR and the Nifty correlation to time your entries on the chart. Let's look at the India VIX now. So based on the India VIX on the daily chart, we have just been moving inside the level of supply and demand for all this while, but you can see now that the level of supply has slightly violated. So because this level of supply has slightly violated, we are now going to remove this level of supply from the analysis, and now we are going to lean against the upper level of supply. So right now the daily level of demand on India VIX is intact, 9.97 to 9.4. And the upper level now is a fresh level, 12.19 to 13.17. Again, USD INR moving to the upside and the India VIX also rising could put a little bit of a pressure on the Nifty's upside. Let's move on to the next chart here, which is gold. Let's start off with the monthly chart. So pretty much nothing to say about gold. It is just moving up and moving up very, very strongly. We have a monthly level of demand situated at 97,807 to 86,871. On the weekly chart, we also have another level of demand around this area over here, which is 1,10,323 to 1,07,145. So currently, prices are extremely far away from the demand zone. Now, if you go into the daily chart, the closest level of demand from current market price is 1,23,127 to 1,19,980. Seems like we might see a little bit of a consolidation, either a trend continuation or then probably a move sideways and then a retracement, taking into consideration that there could be some profit booking since the prices have traveled extremely strongly to the upside on gold. Let's move on to the next commodity, which is silver. So silver also, after making all-time highs, is showing a little bit of a correction. If you look at the monthly chart, the monthly level of demand is located right here from 1,15,733 to 1,05,991. On the weekly chart, we have this gap level of demand, 1,46,739 to 1,40,171. This is also going to be a very, very key level. But on the daily chart, we have a very nice looking level located at 1,49,725. Also 1,50,000 being the round number, we could probably see some action coming in silver around these levels. So the level of demand on silver is 1,49,725 to 1,43,835. Let us see how these levels play out in the coming days or in the coming weeks on these commodities as well. Let's move on to copper now. So if you look at copper, we had this very interesting candle on the daily, but let's start off first with the monthly chart. So the monthly demand on copper is at 898 to 859. This is the fresh level of demand, which is currently far away from current market price. If you look at the weekly chart, we have a nice weekly level demand located at 920 to 892 on copper. So this is going to be a key level. And then if you look at the daily chart right now, we have created a new level of supply thanks to this big strong red candle, and then we had a big move into this level of supply again. So right now we are hovering in between supply and demand, and the current levels of supply stand at 999.73 to 1027.55, and the fresh level of demand on copper is 940.57 to 928.79. In case if copper consolidates and comes down towards this level, we might again see a bounce coming in copper around these areas. Let's look at crude oil now. And for crude oil this time around, I'm going to be using the global market chart. So let me just drag the global market charts and show you some key levels on crude oil. So let me load that chart first. And this is the key level of on crude oil. Just give me 1 second. Share my screen and my charts. So here we have the crude oil chart, and this is the daily chart of crude oil, and you can see how I'm talking about this key level of demand, 53.34 to 51.54. This is the international crude oil level of demand. And the reason why I'm saying that this level is important is because once this level gets triggered, it'll be important to see where crude oil on the MCX is trading at. So this is how you can also actually look at the international markets and time your entry in the MCX markets by looking at the global market charts and looking at key levels of supply and demand. All right, let's move on to the next stock now. We have Reliance. So Reliance has given us a strong move to the upside since its earnings. And now pretty much on the monthly chart, we are still within this monthly level of supply, or you can call it the picture of supply. If we move on to the weekly chart, we have a key level of supply. In fact, right now also we are sitting within a level of supply 1474 to 1505. So it'll be interesting to see whether the the good earnings push this stock up further towards the upper supply, which is 1505 to 1550. As you can also see on the daily chart, we have more or less hit the daily level of supply after the results announcement. But now we will have to see whether the hunger for this stock, increases as the price starts to, probably move to the upside because of the earnings results, or whether because of this area of supply, it will start to consolidate and move sideways and eventually start moving down. So you have one level of supply, 1471 to 1500 on the daily chart. And then you have another level on top of that, which is located at 1515 to 1551 on Reliance. So key levels to watch out for Reliance on the supply zone front. And the closest level of demand, which seems to be a good level of demand, is at 1304 to 1266 on Reliance based on the daily time frame. Let's move on to the next stock, which is HDFC Bank. So HDFC Bank also has been moving up strongly, driving the Bank Nifty index. And as you can clearly see now, we are sitting inside this monthly level. We went deep inside this and showed a little bit of selling pressure coming from this monthly level. We also have this monthly level of demand now, which will be interesting to see. And then if we move on to the weekly chart, we have this consolidation. And just below this consolidation, we have a nice gap looking level of demand, 909 to 869. We don't know whether HDFC Bank is actually going to, probably give you a retracement down all the way here. But it will be a good level to watch out for in case if price do come here. On the daily chart, also, we have another level, which is 888.75 to 868, which is the origin of the move to the upside. All this is consolidation. So unless and until HDFC Bank makes a new high and gives a candle closing above the new high, this area, which is 1020, is going to act as a strong resistance for HDFC Bank. And in case if the candle does close above, then there will be a new level of demand, which will probably be somewhere around over here, 957 to 938. But right now, this demand is not yet confirmed because markets are simply consolidating and they have not been able to break out of this consolidation range. So we'll have to just wait and watch for some new levels of demand to be created on HDFC Bank. Let's move on to Tech Mahindra now. And on Tech Mahindra, we have the monthly chart. Within the monthly chart, we have this level of demand, which is 1257 to 1155. If we go on to the weekly chart, we have this beautiful looking level of demand, 1317 to 1218. And then we also have a level of supply, 1504 to 1570. This is going to be the key level of supply on Tech Mahindra. The next stock is Adani Green. If you look at the monthly chart, on the monthly, we do not have any supply zone nearby. If you look at the weekly chart, we are showing some reactions from this weekly supply that we discussed in our past weekly market view sessions when the Nifty energy sector was also in supply. And then since then, we have had a nice fall from this area of supply coming all the way. Now, the key level of demand on Adani Green is 992.90 to 958. So it will be interesting to see if the price comes here, how does actually Adani Green react to this level of demand. Let's now switch gears to a very, very interesting data set, and that is decoding the FII markets. So very recently, we have been talking about this FII data and how the FIIs are actually positioning themselves at the end of every day. So basically, this data tells us, because this is based on candlesticks, we are plotting supply zones and demand zones based on the FII data. And clearly, we have seen that for many weeks along, there was a lot of accumulation happening on the FII data front. And I kept on saying that right now the FIs are not participating, but once they start participating, the markets are going to move up extremely strongly. And I had pointed or I had drawn this arrow indicating that if the FI data positions start to increase, then we might see the markets also increasing in the upside direction. As you can see in the most recent week, which is last week, uh, after closing the candle in a slightly indecision manner, we had a very, very strong weekly closing on the FII data front. So this is clearly telling us that prices are going to be respecting this level of demand. And in case if this move starts inching towards the upside, then sooner or later, we are going to expect to see all-time highs coming on the Nifty. Okay, so let's keep a close watch on this data as well. So that's it from my end, guys. From the entire Sharekhan education team and all our instructors here, we wish you a very, very happy Diwali. And if you do like our channel, hit the subscription and the like button, and do give your valuable comments in the comment section. Have a wonderful day, everyone. Take care and see you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.